eMarketer, which is an independent market research company that's used for digital advertising, just suggested that Meta is a screaming buy. And that's what we're going to cover in this video. So guys, smash that like button and subscribe if you're new. And if you're in the know, drop a meow in the chat. You're watching More Money. Let's get it. What's up, guys, and welcome back to the channel where the goal here is to help at least 1,000 people achieve financial independence much sooner. And guys, because I am such a big bull on Meta, I actually do read the market industry publications that impact these companies. And so I read a lot of eMarketer. I try to get my hands on as much as I can because some of it is behind a paywall, and so I don't have access to that. But I recently read an article put out by eMarketer that suggests that the current valuation for Meta is way too low based on the revenue growth that they expect as industry leaders. And so this is what I was talking about. This is the April 27th Insider Intelligence report. And so what they're doing here is that they're forecasting out the Facebook advertising revenue statistics after the Apple iOS changes that went into effect. And I'll dive into more detail of those later in this video. But the point that I always get every time I talk about Meta, there are people in the comments that say, hey, Meta is dead because Apple has changed their sort of iOS approach that doesn't allow Meta to sort of track cookies anymore. And that is true, but what are the real impacts? What are sort of like the impacts that we're actually feeling on the ground? And I don't think it's as doomy and gloomy as the investment community believes it is. So you can see with this chart that eMarketer actually believes that although overall advertising revenues are expected to continue to increase, the increased growth percentage is actually expected to decline in 2023, and the percentage of total digital ad spending is also expected to slightly decline. But I think the biggest takeaway here from this chart is that red line, right? Because that 58.11 divided by 50.30 is a growth amount of 15.5%, shown with that red bullet there. And then in 2023, that 65.21 divided by that 58.11 is a growth of 12.2%. So effectively what they're saying is that Facebook's ad revenues are still expected to grow at a healthy clip in 2022, and they're still expected to grow in the low double digits in 2023. And that's really important because in my valuation model for Meta, I'm actually forecasting single-digit revenue growth in fiscal year 2022, and I'm forecasting lower double-digit revenue growth thereafter. And so eMarketer and I tend to align on the revenue growth for Meta, which is much higher than what the market is expecting based on the current valuation that they're giving Meta. But let's dive a little bit deeper into the biggest worry that investors are having. On April 26th of 2021, Apple's app tracking transparency framework went into effect. And effectively what that meant is that all apps distributed through the App Store must show a prompt to users requesting them to opt in to allow advertisers to track them across other sites or apps. So as a result, Facebook no longer receives information about off-platform actions taken by Facebook and Instagram app users if they've opted out of tracking on devices that use iOS 14.5 or higher. So that's a big blow to Facebook's algorithms for advertising, because essentially what happens is if I'm on Google and I search sort of like camping gear and I look at certain types of camping gear, wouldn't it be cool as if the next time I'm on Facebook, Facebook starts showing me camping gear? Well, that's what they were doing previously. Well, now on an Apple phone, they won't know that I was searching for camping gear on Google before I come back to the Facebook platform. And so that really hurts their revenue generating prospects. But from this article, it doesn't necessarily look like it's hurting their prospects that much. And so where I really want to dive into is how are the advertisers sort of feeling about this? And that's a really hard item to gauge unless you're sort of like an industry knowledge expert, which I'm sort of using eMarketer for in this situation. And so you can see that some of the trends that they're seeing in 2022 is that several advertisers have described interest in diversifying their channel mix because they obviously feel that Facebook may not necessarily be as effective anymore, but eMarketer believes that diversification is unlikely to significantly alter advertisers' commitment to Facebook. And then the other thing that I wanted to point out below is that if you look at the core Facebook and Instagram ad revenues, you can see that as of 2021, Instagram actually generated more revenue than Facebook, and that's going to expected to continue to grow into 2023. And so 61% of revenues are now coming from Instagram, and of course that's growing faster than Facebook. And so for all of the talk about how Generation Z does not use Facebook, they absolutely do use Instagram. And so as more and more of them come on, they're going to continue to drive growth of Instagram. And now with Instagram Reels catching up to YouTube Shorts and TikTok, there is less of a reason to go off platform. And the other big issue that a lot of people aren't talking about is that I do believe, and it might happen over the next couple of weeks or no, I haven't been paying too much attention to the news cycle on this, but it looks like they might actually be taking TikTok off of the app stores based on sort of like privacy concerns. So we'll see how that sort of plays out. But that's an issue that could cause Instagram, Facebook, and YouTube Shorts to continue to grow faster and TikTok to actually slow down in the US. Now guys, as I'm not a super expert on that topic, let me know in the comments what you know and sort of like what direction this is going. And let's dive a little bit more into the Instagram advertising revenues. You can see here that in-feed ads on Instagram make up the bulk of the advertiser spend, with only 26.4% of Instagram spend going to stories so far this year. But I do believe that when Reels ads become actionable, the spend on Instagram will explode more than it already is, in my opinion. The other thing is, and this is something that Mark Zuckerberg sort of referenced previously, he said that this is sort of just like a growing pain for advertisers. As they get more comfortable with Reels, they will spend more on it. And I do believe that that's also the case. I really think that you can have some really interesting monetization sort of opportunities with Reels because you're just scrolling through them mindlessly. What happens when you start seeing some interesting products and there's a way to click into that product, takes you right to Amazon, and you're able to buy it? There's a lot of huge content creators that are actually basing their whole channels just on like interesting Amazon finds. So you're seeing it happen. Wait till that becomes actionable. I think the ad spending, once that happens, goes way up. And so the real question that I had when I was sort of reading this article is, how does eMarketer's revenue growth forecast compare to the model that I have on Meta, which the Patreons have access to? Well, it looks like eMarketer and I agree on sort of like our growth forecast. They're forecasting 2022 revenue to grow in the double digits for Facebook. I'm actually saying that it grows at 7%, and then beyond, I'm actually forecasting sort of like low double digits, which is where they're falling as well. And what does that actually mean to the valuation? Well, using a low valuation multiple of 17.5 times earnings, I'm valuing Facebook at $260 per share. And the current share price of $170 per share reflects a share price to its intrinsic value of 66%. So in other words, people are forecasting much slower revenue growth for Meta. Now, there's two major upsides to my valuation. One, the multiple might be a bit low. Two, Meta may be a more profitable business going forward due to the personnel cuts they're making at the moment. If you guys haven't seen that video where I actually go over how drastic those cuts are actually being done at Meta and how much of an upside this could potentially have on the stock, you can get access to that video right here.